The VIP Distinguished Speaker Series is one of the many programs put on by the Undergraduate Business Council for the Red McComb School of Business. Today we are joined by Dean Steve Lindbergh, Associate Dean for Graduate Programs at McComb School of Business, and Adena Friedman, President and COO of Nasdaq. We'll begin tonight with an interview between Dean Lindbergh and Ms. Friedman, and then we'll open up the floor to Q&A from the audience. As a reminder, today's event will end promptly at 6:30 p.m. We greatly appreciate it if you could refrain from leaving early and using your electronic devices. Adena Friedman is President and Chief Operating Officer of Nasdaq and is responsible for financials, day-to-day operations oversight, and budget allocation for each of the company's business units. Ms. Friedman rejoined Nasdaq in 2014 from the Carlyle Group, where she served as Chief Financial Officer and Managing Director for 3 years. Before Carlyle, Ms. Friedman was a member of Nasdaq's management team for over a decade, serving in several roles including Head of Data Products Business, Head of Corporate Strategy, and Chief Financial Officer. Ms. Friedman is credited with significant contributions to the strategy and expansion of Nasdaq. She joined Nasdaq in 1993. Ms. Friedman earned an MBA from the Owen Graduate School of Management at Vanderbilt University and a BA in Political Science from Williams College, Massachusetts. So without further ado, please help me welcome Dean Lindbergh and Ms. Friedman.
Well, let me echo Kenny's appreciation for your joining us. And this is a special occasion for us. And I would be fascinated to know how one goes from being an intern at Nasdaq to your current position as COO and CEO.
Sure. So, well, first of all, thank you all very much for having me here. And it's really a pleasure. I would say my journey at Nasdaq's been a long one. So it's probably worthwhile for me to do a little bit of a background on what is Nasdaq and what was the Nasdaq that I started at, because a lot of part of my personal journey really has been dovetailed with the journey of Nasdaq and how we've grown. So Nasdaq today is a global financial technology company. We operate exchanges here in the US and in Europe, and we provide technology that supports exchanges all around the world. We have over 80 clients, exchange clients who use our technology. We also have 10,000 companies around the world who use our software and services to help them be great public companies. So we have become and grown substantially in the markets. We operate the Nasdaq stock market. Everyone knows that one, hopefully. We also have the largest multi-listed options exchange in the United States. We operate a futures exchange here in the United States. We own and operate all the exchanges in the Nordic countries in Europe, including equities, options, and futures. And then again, we have our very large software business that's global. So it's been an interesting journey because I bet most of you didn't think of us most people think of us as a stock market. And when I started at Nasdaq in 1993, that's exactly what we were. We were a subsidiary of a not-for-profit organization called the National Association of Securities Dealers, and we were just a little electronic market that was seen as the company, the exchange or the market for small companies. What we've grown into is a true, very large U.S. cash equities market, a home to some of the largest companies in the world, including Apple, Microsoft, Cisco, Intel, as well as some, we also have American Airlines is a very large listing on Nasdaq. CSX just came from New York to list on Nasdaq, a big train operator. So we have companies from all different industries that choose to list on Nasdaq. And at the same time, we are able to use all the technology that we've delivered for our own markets and to create change and deliver that across the world. So started there as an intern, went into the trading business to kind of help them figure out how to commercialize some of their products because they were really owned by not-for-profit. They never really were profit-oriented. And then grew up as a product manager. I'm sure a lot of you all know what product management is. I always look at it as the 4 P's of marketing: product, price, promotion, and placement. I'm like, oh gosh, I hope I remember the 4th. And then ended up becoming one of the business unit heads about 7 years into working at Nasdaq and managed the market data business for Nasdaq for 9 years. But in 2003, we had a new CEO that came in named Bob Greifeld, who's now currently the CEO. And we were actually struggling as a company to kind of reinvent ourselves as a public company, as a company, a for-profit public exchange. He came in and really redefined who we are. And so in 2004, I became the head of corporate strategy, and we made our first acquisition. It was my first acquisition, and it was for another trading venue. And then in 2005, we did another acquisition, a much larger one. And then in 2007 and 2008, we bought the Nordic exchanges, and we bought the options exchange. So we started going down a path of acquisition to grow and expand what we do as a company and to redefine us as this global fintech company today. So it was a journey. You know, it's a natural progression based on responsibilities over time, but my journey really, as I said, is coupled with the journey of the company.
Well, now, given your formidable skills and the way you've progressed, surely at this point there's still things that you would like to master and work on in your leadership roles. Do you have anything that comes to mind that is something you're always being alert to as an improvement or a way you might proceed?
Well, I mean, I think that I always look at it as leadership is a combination of a lot of things. So it's a combination of strategy, execution, and the ability to make sure that everyone is coming along with you because they want to. And so you have to look at it very holistically in terms of how do you take the strategy and turn it into execution and get the best and the brightest to come with you along that journey. I think it's a constant education. So I would say that I have still probably a lot to learn about how to make sure that I really master that capability as a leader. But I also think that, you know, for a long time, it was interesting when I was doing deals, I actually thought it would have been good if I'd been a lawyer. And I'd done a JD MBA. I don't necessarily feel that I needed to, but also I just think it's a great skill to have. I don't know whether I'd go back to law school now, but at some point in my career, I wish I'd done that at some point. Yeah.
Yes. Are there certain failures that you would like to revisit, or how would you recover from some failures you may have had?
Yeah, I don't like to revisit failures. In fact, I think the best way to recover from a failure is to, first of all, admit that you have failed, admit that to yourself, and be self-reflective about that, and not to try to defend it. You know, not to try to say, oh, it was someone else's fault, or if only they hadn't done that, it wouldn't have happened. It's to, basically take the responsibility and accountability for that failure yourself, and then learn from it. So, and make sure that you really use it as a self-improvement mechanism. What could you have done differently? What could the company have done differently if it's a company failure as opposed to personal failure? Sorry, just a second. And make sure that you learn from it and you move on. Because if you continue to dwell on it, you can dwell on it for the rest of your life, and that becomes very counterproductive over time.
Now, you mentioned strategy and execution. So, which is easier?
In my personal opinion,
yeah.
I think strategy is easier than execution.
And execution, so why do you say that?
Well, I think that it's easier to figure out where you want to go than it is to figure out how to get there.
Yeah.
And I think that if you really understand your business deeply, you understand your customers deeply, then you can usually figure out a road that you want to go down in order to be able to grow and expand and serve your customers better and to really find a path forward. The issue is that the execution part of it is the really hard work. So it's always good. I can put together a great PowerPoint, but making sure that you can then drive it to fruition means that's where leadership really comes into place. And you have to make sure that all of your people are thinking the same way you're thinking, and if they're on the bus, they're definitely moving in the same direction that you want to move in, that you are constantly measuring them and driving them in a very nice and productive way, but making sure that they're always being brought forward in the way that you think is necessary to execute that strategy well. And it often takes years. So being consistent and persistent and not allowing the business to kind of veer away or to meander, I think is really hard as well. At the same time, in the midst of execution, things can change. So you do have to also be able to pivot when things change, and make sure you kind of move the group over and down a slightly different road. But I think that execution is definitely the hardest part.
And are there certain role models or those you've emulated in terms of their leadership skills and what you might learn from them, and what have you learned from them?
Well, I think I've learned from everyone I've worked for.
Yes.
Everyone. I would say that you learn things that you think they do well, and you learn from things that you think they don't do well. And you can define yourself based on your judgment of what they do well and what they don't do well. So you have to be able to look at both. And every single person in the world does certain things well and certain things not as well. I mean, it's impossible for someone to be perfect. And it's also possible for someone to be horrible, right? I mean, even if you don't like your boss, there's probably certain things you can learn from what they do. But I've never actually had that experience. I actually have been really lucky and I've liked all my bosses. But I think that I have particularly learned a lot from the current CEO, Bob Reifeld, in terms of execution. He is a man that believes in execution. He'll say, great execution beats a good strategy any day. And it doesn't mean you don't have a strategy, but your ability to execute on your plans is the most important thing you can learn how to do.
Okay, so let's roll back the time to the internship days. Now, of course, a number of you have or will have internships. So are there certain words of advice you might give an intern in terms of making an impact and contributing and basically having a good experience?
Sure.
For everybody, including the bosses?
Okay, so I think that I look at it as that there are 4 key things that you have to think about. One is be intellectually curious. I mean, if you're going to choose to go to a company, learn about the company and try to understand what they do, what motivates them, and what their drivers are, and why you're there. Why is it that this company exists, and what are they trying to achieve? And just be intellectually curious. Ask questions, but not, be careful not to get overly annoying, which I think I was a little bit when I was an intern. But mainly, make sure you're there for a purpose and with a purpose. I think the second thing is be accepting of any assignment they give you, because sometimes you're going to walk in and they're going to give you a data entry assignment, and you're going to be like rolling your eyes, like, am I really getting a college education to do data entry? Okay. But I would say that. But at the same time, instead of looking at it that way, you can say, okay, what data are they trying to enter, and why are they trying to enter it, and what can I learn from even doing that? Because if you treat every assignment as, yes, sir, I'm going to get this done, or yes, ma'am, I think this is a great idea, then they'll give you something more interesting over time. They will see you as the go-to person, and when there is something of substance to be given out, they'll give it to you. So I think that's really important. If you roll your eyes, I can assure you, you're not going to get the good assignments. They're just going to keep giving you the bad ones. I think that the other thing is to walk in and be humble and be friendly, and not to come in with an attitude of don't try to edge people out and be sharp-elbowed. Instead, you're there to kind of learn and have fun and be part of a team. And learn from the people who you're working with and the other interns. And if you take that humble approach, I think that definitely everyone notices that, and I think that's important. And then I guess the last thing is to make sure that you respect the hierarchy of the company that you're in. So some companies are very flat, and you always hear the great story about Eric Schmidt. When his first day of work, he had a programmer who was sitting at his desk in his office saying, "This is my new office. It's nice to see you. It's nice to meet you, Eric. I'm going to be working next to you now." And I think that with the culture of Google, that was actually important for him to accept that. And that's the culture they've created. But you do need to accept the culture that you've decided to enter into. I had one intern, and Nasdaq's more hierarchical than that, to be honest. I walked in. It was my first week back at work, back at Nasdaq. I had now 1,300 employees that I needed to get to know. And I had an intern who asked me for coffee. And I thought, okay, well, I have 1,300 other employees to meet. And I appreciated the gumption, in a way, that this person asked for that. But they had to respect the fact that I had a lot of other people that I needed to, permanent employees who were counting on me as their leader, that I really needed to get to know first. And we did give opportunities for the interns to meet the senior leadership in a more structured way. So I probably would have recommended to that intern not to have emailed me.
And there was always the issue of who paid for the coffee anyway. So let me turn my attention a little bit to actually the business, if you will.
Sure.
Come on, isn't this just like a regulated business, like a utility, and competition isn't that big a deal, and what are the forces at play in your world when it comes to expansion and profit, of course? What are some of those factors, and what's that landscape like?
Well, we should never lose sight of the role that we play in the U.S. economy. And frankly, the role, and certainly the Nordic economies, as well as the role we play in the global economy, because we do work with exchanges in emerging markets that are really trying to grow and expand their economies, and they count on us to provide them the technology that they need to be able to thrive and to create a public market. We have worked with economies that have come out of oppression and decided to become capitalist in nature, and they count on us to deliver the technology and the advice and the expertise to help them launch a capital market. We also serve a role in this country, that we are there as a job creator because we're there to create efficient ways for companies to get access to capital. So we never want to forget our mission. However, we are a public company. And so people are kind of surprised to hear that Nasdaq New York, the New York Stock Exchange, is a subsidiary of a bigger public company today. And all of the exchanges in the U.S. are public companies today, for the most part. There are a couple that aren't. And that means that we have both a responsibility to our member firms and to investors, but also to our own public shareholders. And that's a balance we have to strike every day. Nasdaq is a $10 billion company, a public company, and we have a great responsibility. So we are always talking about that balance between making sure we're creating a fair, efficient market for investors, and at the same time we're making sure we're growing and expanding what we do to serve our shareholders.
So being international and now having expanded so much, there must be a non-trivial amount of regulation in the markets you operate, everywhere from Asia to Europe to the U.S. Is that dramatically different, and is it driven by principles, societal principles that are different, that form of regulation?
Well, first of all, we've always been highly regulated. So we were talking about this a little earlier. We actually, in a way, are fortunate because we've always been highly regulated. We have an ongoing dialogue with the regulators in Washington and in Brussels all the time. And regulation can actually be quite helpful to us because we operate as a regulated exchange, and there are things that when regulation comes in that make it so that we can create a robust environment for investors. So we don't see regulation as like this necessary evil. We actually see it in a way as an enabler of our business in some cases. Now it could go overboard, no question about it. But that dialogue with regulators to us is a core part of what we do, and it's a core strength that we have. So we look at it as the regulators are there to understand our business deeply, and it's our job to teach them. And it's our job to be an independent, objective source of information, education, and I guess just a general partner in a way to make it so that we create a fair environment for investors in the U.S. and in the Nordics. And that's a constant dialogue. So we don't mind it. Now we're regulated by the SEC, the CFTC, to some degree the Fed, but not to as much of a degree. And then of course all the FCAs and FSAs in Europe. And that's just part of what we do.
So I have obviously more questions for you, but I have a little question for the audience. Raise your hand if you know what NASDAQ stands for.
It actually was a Jeopardy question. All right,
Well,
you have someone
we
right
have
here.
one, okay. You don't have to respond, I'm just kind of curious. I mean, we'll take you at your word. But it is a curiosity for many, is that correct? So maybe you might explain that, and in the context then of explaining that, it doesn't sound like I can just go home and decide I want to start an exchange. But maybe that history with NASDAQ would help amplify that.
Sure. Well, NASDAQ stands for the National Association of Securities Dealers Automated Quotations. So, and apparently it actually doesn't stand for anything anymore because we dropped it as an acronym a while ago. It's a word now. But when we created it, it was an acronym. And the reason is because we were a subsidiary of the National Association of Securities Dealers, which was a member-owned self-regulatory organization, meaning that all the firms that wanted to trade stocks in the United States, New York listed stocks, Nasdaq listed stocks, had to be members at the time of the National Association of Securities Dealers, and that group essentially oversaw the activity of those trading firms and regulated them. It was kind of an interesting construct because they really were serving a governmental function of regulating their own firms, and they have a very tight tie to the SEC. That organization is now called FINRA. So if you ever hear the word FINRA, that is the current iteration of that organization. But when Gordon Macklin was a senior executive at NASD back in 1971, and it was the dawn of the computer, and he was watching what was happening down on the floor of the New York Stock Exchange and wondering why we needed to have all these people running around with pink slips of paper and everything was so manual when the computer had arrived. So why does everyone need to be, aggregated in one single location? And therefore, isn't that also creating inefficiency and unfairness in the market? So he was a true visionary, and he said, okay, we have computers and we have networks. So I want someone who can sit in California to have the same access to the market as someone who's sitting in New York, sitting in Austin or anywhere else, and they're all connected by computer, and they're putting their quotations in to a central location. And so he created it. Now, the first stock that really made us who we are was Microsoft. Because at the time that Microsoft went public, they didn't qualify for New York. And they wanted to raise capital, and they had no really efficient means to do it except through Nasdaq. And Nasdaq gave them a home and gave them the capital they needed to grow their business and had an efficient, electronic, computerized way to connect themselves. And of course, that was all about Microsoft. And so when they did ultimately qualify for New York, they chose not to leave. They just felt that Nasdaq had given them their chance. And Nasdaq was much more consistent with their own culture. So they stayed. Same with MCI. MCI was our network provider, and they grew up as a public company on Nasdaq. And then came Apple, and then came Intel. And all these companies that were really growing up in the new era of technology embraced what we were doing, and they really helped make us who we are.
Now, certainly in the university environment, we work a lot on ethics, and there's probably a higher visibility when it comes to corporate social responsibility. How do those impact what you do, what your clients and visitors do? Is there some influence that has on business from where you sit?
Well, I think it actually all flows from investors. So today, large institutional investors care a lot more about corporate social responsibility than they used to. So ESG, so environment, social responsibility, and governance. And those investors are making investment decisions based on whether companies are doing a good job of that or not. So because of that, I would say that companies are changing, and more investors are putting together parts of their organization that focus on ESG. There are indexes now that have been created that measure companies as to whether or not they're being good corporate citizens or whether or not they're being socially responsible around the environment. And that's all causing companies to change because they want to attract that capital from those investors. It started with European pension funds, but it's definitely moved into the mainstream. So large U.S. pension funds, large mutual fund complexes are now becoming very focused on this, and I think it is changing the nature. So one of the things that we do at Nasdaq is we have a big advisory service that helps companies understand how to target certain investors. And we do a whole ESG report for them on how to attract the right investors based on their scores and based on how that they would fare in an investor survey. And that's helping the companies, therefore, change in order to be able to attract those investors.
Well, this is an opportunity, I do believe, for you to ask some questions. So please, let's have some questions from the audience. I have one back here.
Hi, my name is Zach. I just wanted to see if you could explain more about how Nasdaq and you specifically in your role work with the government and how you interact with them.
Sure. So, for instance, on Thursday, I'll be going down to Washington to speak with different members of the government. I think that we do that, as I said, pretty consistently with the regulators, but we also talk with the government a lot about policy matters when it comes to U.S. equities or market structure, the equities markets, the options markets, and futures, and then we spend a lot of time in Brussels. So we have a pretty, I think, active government relations organization that really does focus on making sure that the policy decisions that the government's making are consistent with healthy, growing capital markets, and they're not forgetting who they're ultimately serving, which are investors, in making the decisions on how to manage the capital markets.
Another question. What is your question?
I'm Luis, and I study economics, and my question is, from a market efficiency standpoint, how do you see dark pools and the way that they'll develop in the near future?
Sure. Well, dark pools, so what for most people? So dark pools, one of the things that's a big part of our market structure today is that when I started at Nasdaq, if you wanted to trade Microsoft, you had to trade on Nasdaq. Today, if you want to trade Microsoft, you can trade on 40 different venues. You can find liquidity across 40 different places. 12 of them are exchanges. Now, we own 3. The New York Stock Exchange owns 3. BATS owns 4. So just so you know, we have multiple exchanges. Confusing, which is part of the issue. And then there are a lot of dark pools, which means that they're not exchanges. They're owned by broker-dealers, but they're a way for liquidity to aggregate in a single location and for you to be able to get trades done, but without being able to show a quote to all investors. So that's why they're called dark. They're not lit venues. Exchanges are considered lit venues, and dark pools are not. So our concern around dark pools is that they were originally thought of and created to facilitate large orders to be executed without creating market movement in the stock market. So if you are a large institution and you want to trade 1 million shares or even 10,000 shares, plopping that right into a lit market will mean that you'll move the market. It's giving a lot of information out to others. So they would use dark pools as a way to get that done in a quiet environment that doesn't have to be disclosed to everyone. But the fact of the matter is today dark pools, the average trade size is something like 150 to 200 shares. And it's become a mechanism for people not to show their hand in a way that we think is not necessarily the best for an average investor. They don't necessarily get access to those dark pools, and they don't know the price discovery that's occurring in them. So our view is generally that we should be mindful of the role of dark pools in the U.S. markets. They shouldn't be prohibited or anything, but we got to make sure that the market structure operates in a way that's a fair level playing field and that does not disadvantage small investors. And so we do discuss that down in Washington. It does create complexity, and we talk about that a lot as well. It's not an easy thing to change. You can't just but you have to look at what kind of behaviors you want to create, and therefore how should the markets evolve.
Nice question. I think we have right here. Thank you.
Hello, my name is Hassan. You've obviously climbed to a very high position in your field, and oftentimes many women find that they face a fair amount of adversity, specifically in the business field. So what advice do you have for women entering the field, as well as all of us as university students, to dealing with adversity when it comes to different forms?
Sure. Well, first of all, I am psyched that a man asked that question. So thank you. I think that I would start by saying I've been extremely fortunate in my career that I've had very limited adversity, kind of adversity. So, in terms of, I have not had to claw my way through the organization to get what I deserved. I think that I had a lot of luck, and I had a lot of sponsorship by people who cared for me and cared about my career and wanted to see me succeed. And that was extremely fortunate. So I believe the key for us is to make sure we do the same thing for the young people in our organization, that we care about everyone who's in the organization, and you try to make sure that you're finding those people who are working harder, who have real potential, who are showing a desire to stay there and make a career out of their time at Nasdaq, and you bring them along. One of the things that was really lucky was when I was young, my boss would bring me in meetings with the president of Nasdaq at the time. I was 24, 25, and I was going into these meetings primarily to listen and learn. But what an experience, what an education. And the fact that I got that chance allowed me to have exposure in a way that, a lot of other young people don't get to have. So that's something that we're trying to promote as well, is getting young people to have more exposure to more senior ranks so that they can learn, they can experience, but also we get to ask their opinions, and they have them. So we should learn from them. So I think that I'm not really answering your question, but the best thing to do is to work really hard, to be very eager, to be willing to say yes to a lot of different things, and then walk back to your office and go, I have no idea how I'm going to do this, but to learn it as you go. And at the end of the day, you will be recognized for that, and hopefully promoted and brought forward in the organization.
Thank you. I think we have
Ms. Friedman, thank you very much. So with the application of the IAX, that's known for its speed bumps, to become an exchange, what is your thought process on high-frequency trading and how that's affecting the industry?
Sure. Well, so IAX is a dark pool, and they were the protagonists in a book called Flash Boys, written by Michael Lewis, and I think that they have been looking at going from being a dark pool to becoming an exchange. And they have a specific feature called the speed bump that introduces a 350 microsecond delay in orders coming into their pool. And you'd say, why does that matter? It actually matters a lot because there are rules that exist today in the markets that the SEC says you cannot intentionally delay an order to come into your system. You cannot intentionally delay your response to that order. And therefore, immediate access to your quote is a critical function of the national market system today. They are intentionally creating a delay, even though it's small. But in today's world, trades occur in 25, 50 microseconds. Our latency is less than that. So I think that it's in the world of computers, and introducing that delay just is inconsistent with what the SEC was trying to create in Reg NMS. If the SEC accepts that, then that's fine. But that allows us all to do it. And so it's all about having a level playing field. But if they do it, what it does introduce is a potential for locked and crossed quotes, so quotes on the screen to be locked or crossed, which makes the market seem very inefficient. It also introduces, they have other features in their market that are introducing some advantages to them and to people who use them that we don't agree with. Again, it's all about a level playing field. But if the SEC goes forward with it, then we have a market that we will very likely introduce a similar speed bump to, which we tried to do 3 years ago and were denied. And so we'll see how it goes. But it's all about making sure that if they're going to make that decision, they're making it in the context of understanding the impact to the broader markets.
Hello, my name is Gabriel. I'm a junior computer science major here at UT. I was curious, my question is kind of a follow-up on high-frequency trading dark pools. Even though the amount of dark pools have increased and their average trade size have increased, we've seen a lot of block trades now being done in dark pools, more specifically closed-limit dark pools such as LiquidNet, where they have very specific requirements for you to join their dark pool. And I was wondering if Nasdaq is thinking of a branch approach and new strategy to try bringing back a lot of those big traders.
Yeah, so we don't see, we believe that we are there to provide a service to anyone who wants to participate in the lit venue, right? To have that quote exposed, to have it available for everyone to be able to react to and to be able to trade against. And so there are those certain orders, like large orders, particularly those that are facilitated through LiquidNet, that if you were to bring that order in wholesale and post it into our market, again, it would move the market, and it would create a level of friction that may not be in the best interest of that person putting the order in. So having alternative venues that allow these large blocks to take place in a private setting and then report it into the tape. So everyone gets to see the trade once it occurred and sees the price of the trade that occurred. Every trade is ultimately reported into us for distribution to everyone, to the investors. But to have that be able to happen in a quiet place where, if Fidelity's trying to get 10,000 shares done, and LiquidNet ties into their inventory system and sees that there are 10,000 shares to be done, and then Wellington says, oh, I've got 10,000 shares to sell against the buy. That should occur in a nice, quiet, automated place, and then that can be reported into the market. We don't think that that's a bad thing. We actually think that that's great. But Fidelity and Wellington, the issue is that oftentimes those two orders are not coming in at the same time. So they could sit for hours with that 10,000 share order before the sell comes in to take it apart. Well, if they need more immediacy of trading, they have a lot of ways for them to work that order into the markets that does not cause market friction. They can use other 40 venues. They can create, and they have very sophisticated programs now to be able to manage those orders into the market in order to be able to get executed faster. But if they have patience and they want to use a liquid net, we think that that's a good use of market structure.
Thanks, Friedman. Thank you for coming out. First of all, my name is Garrett. I was curious to your thoughts on ETFs and how they've affected the market, and then your opinion on ETF trading or investing versus a single stock.
Sure. So we actually are a significant ETF creator ourselves, or an index creator ourselves. So we have a little over $100 billion of assets under management tied to indexes that we've created and that we've partnered with ETF sponsors to put to market. So we are a big believer in ETFs as being a low-cost and tax-efficient way for investors to get exposure to the market without having to be market experts. So when ETFs were first created, and the Nasdaq 100 is one of those benchmark ETFs indexes that was created over a decade ago, the whole idea was to give people the ability to have exposure to the great companies on Nasdaq without having to pick one or the other, or to have to create a basket and create inefficiencies on trading and on the taxes and on the fees that they pay to get that done. So we're a huge believer in that as being a way to create a more egalitarian market for the average investor. And what was interesting about it, though, is that was really a way just to benchmark our performance and then to invest in our performance. But what's come out of ETFs since then has been it's become an incredible investment technique or an investment vehicle for different strategies. And I call it outcome-oriented indexes, or a lot of people call it smart beta indexes, as a way for you to invest in an outcome. So if you want to get exposure to dividend stocks, you don't have to go figure out which stocks have dividends and how many have been growing their dividends. Just invest in our Dividend Achievers Index ETF, and you'll have exposure to companies that are growing their dividends. And it gives you a chance to have that kind of take different strategies in the market and almost become a professional investor as an average retail guy. So I think ETFs are great. And it's interesting to see how many have come to market. We do need to make sure that the market structure can facilitate them. And we are working on certain enhancements to the market structure to make it so they can trade efficiently.
So there are a lot of great technical questions here, but I was just curious, what are some of your hobbies?
Hobbies. So I practice Taekwondo, and I started practicing Taekwondo with my kids when they were younger. I actually have a 20-year-old and an 18-year-old, which is hard to believe. But when they were younger, they started taking Taekwondo, and then we started doing it as a family. So my husband started taking it, and I started taking it. And now I love it, and I became a black belt in June. So that's my one major activity outside of work. I run, and I also do kickboxing. But outside of work, and my philosophy has always been, if I'm not working, I'm with my family, and everything else is less important. So I really have spent my whole career working and then being with the kids. And now that the kids are 20 and 18, and obviously me not want to spend as much time with me, I'm trying to find more activities and ways to be able to fulfill my time.
Other questions?
Building off of that one, have you ever found it hard to balance your work life and your family life at the same time? Have you ever had any issues come up with that?
It's extremely difficult, to be honest with you. I don't want to sit there and say it's not. But so the first thing is my husband and I have known each other since we were in college. And so we've kind of grown up together, and we're true partners in everything. He is awesome. And so as we started our careers, we both had these really high-powered careers or early start to the careers, but we had kids really early. And so we have had to really adapt our careers to the kids. And that, I think, was actually easier than going down a road for 10 or 15 years and then suddenly having kids enter the picture, because that's I think it's harder to adapt once you're further down. So we have had to manage the kids in our careers all the way through. And my husband, I worked part-time for 4 years after the kids were born, and Nasdaq gave me the flexibility to do that, which I strongly applaud. And then my husband actually decided to go and work part-time as a lawyer. He did a job sharing arrangement for 10 years. And because of that way, as my career started progressing and he wanted to spend more time with the kids, we've been able to make it work and balance it out. But there have certainly been things I've missed. It's just awful when I remember once my son was playing in the playoffs for baseball. He played baseball his whole young life. And I was in Dubai, and I was 2 o'clock in the morning, and I'm on the phone with my husband, and he's giving me a play-by-play of the game because I was missing it. I was really bummed not to be there for that moment. So there are times when you miss things, but that partnership with your spouse is really critical, and realizing you both have an equal responsibility to the family and to your careers that make it work.
Hey, Mrs. Friedman. So I know that you started working for Nasdaq in 1993, and you started working there until 2011, and then left for a little while to work in equity. But it's just really interesting to have known that you worked throughout the late 2000s and during Nasdaq's big expansion to the European market. And I sort of wanted to know what it was like working in management during their expansion to the Nordics, with the purchase of evaluation of XM, and then sort of what the European market reactions were during that time, and seeing a powerful American stock exchange break into the European market.
Well, so going into Europe was a really interesting experience and a really interesting time. So just to give a little more history, we had decided that Nasdaq really wanted to become more global and be able to take our great technology and the kind of the markets that we had expanded into and be able to try to continue to grow outside of the United States. And Europe was going through a very interesting time. Regulation. When I talk about regulation, it can be a catalyst. There was new regulations coming into Europe called MiFID that was going to create competition for the exchanges for the first time. And we had lived through that, and frankly had suffered through that, and had come out the other end a much, much, much stronger company as a result of it, and had learned a lot from it. So we had a lot of expertise in what was about to happen in Europe, and the experience that they were about to have. So the first thing we tried to do was buy the London Stock Exchange, and they weren't as receptive as we would have liked. So we went hostile and did not win that deal. But honestly, it taught us a lot, and it made us even more interested in making sure that we could be part of the European markets. So we then started talking to OMX, which were the Nordic exchanges, and they were actually quite receptive to a partnership because they were a little bit more forward-thinking and realized what was about to happen to them. And the fact that competition was going to come in, we were known as having the best technology in the exchange business, and they also had a global technology business. So not only were we able to buy into the Nordic markets, but we were able to buy into a global market technology software business. And we were able to take our technology and promulgate it across the world, and it's become a very large part of what we do. And I'm so thrilled that we had the chance to join up with LMX because it was such a seminal event for us, but it was a seminal event for them too. So why we were successful in doing that though was we have 800 employees sitting in Stockholm. We have many employees in Denmark, we have employees in Iceland, in each of the Baltic countries, and in Finland. So we did not try to make it a major synergy play where we sucked everyone out of Europe and brought them to the United States. In fact, we've been growing in Europe and using Europe as our center for our global technology business, in addition to continuing to be very vibrant and growing and a great partner to the member firms in the Nordics. So I think because we've embraced it as part of who we are, and we've actually become kind of Nordic, it actually has really helped us grow and expand and become a very respected member of the European community.
Good questions. Have any others?
Hi, my name is Ariel. Sorry. super loud. So I'm actually curious, what's like the scope of like your day-to-day operations? Is there anything that ever stays the same? Are you always doing something different, every single day?
Yeah, I've been really lucky. I would say that, well, first of all, I do something different every day, which is great. But starting at a young age. So product management, if I could do an advertising for product management, it allows you to do something different every single day. And by owning a product, you're owning a small business. You're owning a P&L, you're responsible for its success or failure, you're making pricing decisions, you're making feature function decisions, you're making commercial decisions as to how to get the product out to market, you're talking to customers all the time, and you are just, it's a very dynamic job. And I started doing that when I was 27. So I owned the forgotten children within Nasdaq for a while, some products that no one cared about. And I was able to grow them and expand, and therefore I could do what I wanted with them. So I had a lot of autonomy at a young age, and I never did the same thing every day. I have not done the same thing every day since I was around that age. But as the CEO of Nasdaq and president of Nasdaq, I'm responsible for all of the businesses within Nasdaq. So so who rolls up to me are each of the leaders of each of the businesses within Nasdaq. The CFO, the CIO, the head of HR, the head of marketing continue to roll up to the CEO, and the general counsel, of course. But I have the responsibility for all the businesses. So every single day is different. We have 10,000 corporate clients. We have 100 exchange clients. We have several hundred member firms. So today I'm in Austin. I met with one of our member firms, one of our trading firms here in Austin to get their perspectives on trading in U.S. equities. Tomorrow I'm going to go meet with a bunch of women executives from corporates down in Dallas. And on Thursday I'm going to go down to Washington and talk to some politicians. So every single day is different, but you have to make sure that the one thing I would say is you have to balance out the inside with the outside. And I spend a lot of time in the office. So whether it's in Nasdaq's New York office or in Stockholm or in Rockville, I am in the office meeting with employees, going through plans. I have weekly meetings with my team. I have one-on-ones with each of my business leaders. And I also make sure that I have specific projects that I'm tracking and working on all the time inside. And then you balance that with the outside. You've got to talk to clients and influencers and regulators, but it's a balance, and it's a great job. I love it.
Well, I believe we have time for one more question. So would anybody like to take this opportunity? I think we have one here. I think yes.
So you were talking a little bit before about how Nasdaq was really supportive of you throughout your career in terms of like work part-time and all that sort of stuff. And also that you were very successful there, obviously. So if you had been at another company where you were still, being very successful, but you didn't have that support from the company, do you think that you would have made a career switch, or you would have, kind of kept going with that company? And what's your perspective on like making sure the culture matches you and all that?
Yeah, no. So after my first son was born, I called my mother and I said, I have to quit. I have to stay home. I look at this child and he depends on me, and I wanted to spend every minute with him. And it was my mother who said, Adena, you've got to go back to work. She had been a stay-at-home mom until I was 10, and then became a lawyer, and actually became a very successful lawyer. So she'd seen both sides. And she kind of knew my personality, and said, you've got to go to work. You're going to drive yourself crazy if you're not working. So I'm really glad that she did that. But had Nasdaq not offered me the chance to work part-time for a period of time, right at that moment when I was feeling the hardest pull to home, I think I'm not sure I would have been able to stay. I think I would have found that balance was out of balance for me, and I would have probably done something different. So having the chance to have that moment when I knew personally that I was feeling an immense amount of guilt about not being home, to have the chance to say, well, I'm there, 3 days home at work, 4 days at home, and then 4 days at work and 3 days at home, and then finally 5 days at work and 2 days at home, as my kids grew and became a little more self-reliant, and frankly the guilt started wearing off. I think that was really important for me in my own career, and Nasdaq gave me that chance. If they hadn't, I don't know whether I would have been able to stick it out.
Well, to kind of wrap it up and leapfrog off of that question ever so slightly, I think before the assembly, you shared with us very briefly your perfect day. Why don't you just tell us that perfect day, because I thought it was a lot of fun.
Well, my perfect day would be that in the morning I would sign a deal. That could be a sale to a client or an acquisition. And I have to say I love doing acquisition. But sales to clients are awesome too. So you sign a deal, you get that awesome feeling of accomplishment and partnership, and I've done something great for the company. So that's the morning. And in the afternoon, I spend the afternoon watching my son play baseball. Because I did truly love every minute of watching him play as a kid, and being there as part of that, being there as a parent. So that would be my perfect day.
Well, let me share that this occasion is my perfect day.
Really?
Indeed, yes. It's just such a delight to have you here joining us in Texas. And thank you so much for joining us today.
Thank you. Thank you.